Okay, guys, Happy New Year. It's Tariq here, and I'm here with a new video on Chargepoint, guys. I haven't uploaded for a while, but I've decided to do some things differently in this new year. So we're going to be doing a lot of videos, okay? I really believe the markets are going to be rebounding in 2023, and we're going to start off the new year with a video covering Chargepoint. So, like I said, guys, ever since I've been recently posted, we've seen how the interest rates and things like that have really caused the markets to crash. Okay, and that's just simply because a lot of that money is shifting into dividend stocks, high yield savings accounts, bonds, and growth stocks have been absolutely creamed. So now we take a look at ChargePoint. Okay, ChargePoint is one of the stocks that I was extremely bullish on, and I know a lot of you guys were talking about all this one failed, blah blah blah. So we're going to talk a little bit about ChargePoint in this video. If you guys enjoy my content, please smash the like button. It really helps. So let's take a look at ChargePoint, guys. So ChargePoint is right now trading at around $9. We're going to take a look at some of the recent financials and go over some of the bullish catalysts that I believe, because I do believe that the electrification of vehicles will happen. So we really don't have to worry about that in the long run. I think as long as we, as long as we maintain our goals and things like that, hold our shares, everything will be okay. But I need to tell you guys about some potential risks coming in the future as well. So we're going to talk about that. So let's just get right into the video. So right now, ChargePoint's at around $9, guys. $3 billion market cap. Let's take a look at some of the recent financials. So ChargePoint reported their third quarter revenue. Okay, let's take a look at these numbers. We can make this a little bit smaller, or a little bit too big. Okay, so let's take a look at revenue. So revenue growth in the third quarter was up 93%. And like I said, guys, this is a company that is going to grow along with the electrification. Now, we know that Tesla recently came out with some bad delivery numbers, and that was due to a lot of the shutdowns in China and things like that. China is still dealing with the pandemic, so the Tesla does nearly half of its deliveries in China, okay, guys? So don't be too alarmed by that. Overall, the market is doing well in terms of electrification. But the only thing about ChargePoint is that the company continuing to lose money, okay? So obviously their net losses were around 84 million, so losses are accelerating. But the good thing is that the company continues to increase guidance and revenue is continuously going up. So on those standpoints, everything looks good. Now, right now, the stock is actually trading below its initial SPAC price, and it is possible that ChargePoint stock could continue to dip along with the overall EV market. So, like I said, I wouldn't be alarmed too much. I think at a $3 billion market cap, obviously, it's a lot more attractive than the price was when it initially had the whole spat mania back in the late pandemic where it was $50. So I think right here you're getting a good price. And if we take a look at the RSI, we can see that the RSI over the last year is trading right around 40 or 30 or so. So this, in my opinion, would be a good buying opportunity. I'm probably going to run in there and grab some shares of some of these beaten down EV stocks. So now if we take a look at the corporate presentation, okay, one of the nice things about ChargePoint is that a lot of these EV stocks were absolutely crushed, okay? So if we take a look at some of the competitors, right, we're here on Yahoo Finance. Let's take a look at EVgo, guys. Okay, EVgo. All right, EVgo's been absolutely crushed. That stock's at $4, right? The overall industry. Let's take a look at Blink. Blink Charging. Blink Charging's at $10. So all of these EV stocks are down. Okay, I wouldn't be too alarmed here. And what we're looking for is obviously revenue growth, and we're looking for mass adoption. So 80% of Fortune 500 companies are ChargePoint users, and the companies just continue to grow. Okay, guys. Now, what I do worry about is if the Fed doesn't lower interest rates, that growth stocks could continue to crash. But eventually they're going to have to. Now, the Fed chief Jerome Powell, he thinks that rates will be lowered in September. So in the fall, so in Q3. So we could see some more downside, in the short term. But the good news is, look, as you can see here, month over quarter, revenue is just trending up. So the more and more people are using ChargePoint services, and I really do believe that the EV boom isn't here yet. We haven't even we haven't even hit the cusp of the EV boom. I really believe that things are going to get even better and even bigger. It's just basically being patient. So like I said, guys, we look at ChargePoint. Let's take a look at some of the financials. Okay, we take a look here. Okay, like I said, doing about $400 million over the last 12 trailing months revenue, with a pretty nice balance sheet as well, over $400 million in cash. So the company is more than enough money to get through. Obviously, leverage free cash flow is losing $164 million per year, but like I said, this company's still in a growth phase, and it's still a small cap at a $3 billion valuation. So I think ChargePoint, I think all these EV stocks, especially what happened to Tesla recently, are good buys. So I'm going to be adding more to my portfolio this month. So if you guys enjoyed this video, please give me a thumbs up and subscribe for more videos. That's all I got until next time, guys. Take care.